A que hay que estar muy pendientes del mercado, de este nuevo orden económico global, muy pendientes de analizar las consecuencias para un día histórico para Estados Unidos en el que parece que por fin la Cámara de Representantes va a votar ese fin del cierre de gobierno federal que cumple ya 43 días, recordemos 12 de noviembre. En estos momentos continúa ese comité de reglas de la Cámara de Representantes desvelando las consecuencias, hablando de esas reglas, de incluso poniendo sobre las IES, los puntos sobre las IES para esa duración, para hablar también de esos demócratas y republicanos y para que logren sacar adelante esta polémica ley de financiación. Se está cultivando un 2025 con un nuevo orden económico global, con un presidente estadounidense, Donald Trump, que continúa haciendo valer su política comercial, dando algunos tumbos, haciendo muchas treguas, la última, como saben, con China, de un año de duración, la cuestión de las tierras raras, aranceles de Donald Trump frente a un nuevo orden económico global, probablemente liderado por China. Vamos a intentar hablar de estas y otras cuestiones con todo un peso pesado de la economía. Hablamos del columnista jefe de Financial Times, con Martin Wolf, al que tenemos el gusto de presentar y saludar en este plató. Martin Wolf, chief columnist of the Financial Times. Good morning.
Good morning.
Welcome. Is the global economic order changing? How has it changed?
Well, first of all, the world economy is always changing. That's its nature. We have a very dynamic economic system. But I think what is probably special about the moment is a very large part of the change is driven by politics. It's not driven by economic processes, though there are some very important ones, particularly the rise of artificial intelligence, and there are economic effects of the politics. But the really big story of the last year has been Donald Trump's presidency, the second one, the trade war, which is still ongoing, the uncertainty he has created as a result, the uncertainty about what's going to happen with American monetary policy. All these things are predominantly political, and that creates a very different way of looking at the world economy from the ones that we have been familiar with in the past.
It seems that China is prepared, despite the truce with the US, to impose restrictions on rare earth elements, particularly on US companies linked to the military. Is China, Martin, taking the initiative in the rare earth trade war? Do you think this could end the truce trade?
I think it looks as though now the Chinese have decided to keep these restrictions in some form as a way of exerting leverage on the world, a way of making clear that they can be just as threatening as America, though in different ways, and because they want to make it very, very clear that nobody can push them around, that they have very considerable power. One way of thinking about the world, you have two superpowers. They are across-the-board superpowers, economic and military. But in the economic sphere, America's power rests particularly in the size of its market. So closing off the market with protection gives it leverage. China's power, there are exceptions here, but China's power rests in its supply. It's the dominant supplier of manufacturers to the world, and particularly it has achieved a monopoly position in rare earths and critical minerals. And it wants to make clear that it has this weapon, and it is prepared to use it, and it is the only country, except to a small degree Canada, that has been prepared to retaliate against the US in this way, and it's clearly prepared for this. It has planned and prepared for this possibility. So we're looking at a world, again, it's politics running economics, in which superpower rivalry is a central feature. And this rivalry between the US and China is really new, because we haven't had a head-on conflict between two economic superpowers before.
And what can the US do beyond exploring agreements with Australia and other partners? What can the US do to reduce its dependence on China for critical minerals?
Well, all it can do is develop them at home or abroad. There are political reasons why they didn't do it in the past. The mining is very destructive. It creates terrible pollution. People don't want it. In a democracy, it's very difficult to do this. And it hadn't been seen as a high priority. Now, in time, they will be able to do it, but my understanding, I'm not an expert about mining, is that it will take quite a few years. So they are vulnerable, including their defense establishment. They are vulnerable. And I think they didn't plan for this very well.
Where does the EU stand in this whole economic order, in this whole trade war? Does it need EU to forge more alliance, or has it wasted too much time?
Well, what the EU can do is, I think, limited. My column this morning is about this, actually. It's fragmented, we know this. It is not mobilized for warfare, either kinetic warfare or economic warfare. It has tried to have peaceful relations and open markets, and that's generally been a very good policy. But in the current world, that doesn't work very well. And the EU, in addition to the reliance on American markets and Chinese raw materials, it's an energy importer. A very big energy importer, so it's relatively vulnerable, and of course it doesn't have the military capacity to defend itself, so that's why it's so dependent on NATO, which is America. I think the reality is that Europe is not equipped politically or economically to handle the pressures of today very well.
And regarding Donald Trump's trade policy, Martin, do you think it's overly optimistic to assume that tariffs will allow the country to pay off its debt, or even pay check 2 million Czech dollars? What consequences might this have for inflation, for example?
Well, this is a complicated story. First of all, we don't know what the Supreme Court is going to decide about the legality of the tariff actions of the Trump administration. My own view, for what it's worth, is he is doing things, he has been doing things which are well beyond his powers. But whether the Supreme Court will agree, we don't know, but that's going to be very important. But even if the Supreme Court allows him to go ahead, the revenue generated by the tariffs will certainly not pay off America's debts. It won't begin to cover Americans' deficits. So the debts will continue to grow. We know that very, very well. The US will continue to run the largest fiscal deficit of any major Western country. It will therefore continue to have rising debt, and it will continue to depend, without doubt, on foreigners to buy that debt. So the question is, how long will foreigners be willing to buy that debt? On what terms? The US also wants to lower interest rates. I think the world will want higher interest rates over time. Now, what will that mean? It will mean probably a weaker dollar, and almost certainly at least no decline in inflation, unless there's a huge recession, which seems unlikely at the moment. So I expect inflation to remain above target. It will be sticky. The Fed will be pushed to lower rates. It will find it difficult to do so. And the fiscal problems and external deficits of the US will continue regardless of the tariffs.
Do you think now, but $50 billion, what consequence could a potential US Supreme Court ruling against tariffs Trump?
Well, obviously, if they really stop him from doing it, the trade war will stop. That's not going to happen. He can clearly find other means to do this. But it may mean that some of the tariffs are reduced. And it may mean that he will find it more difficult to continue with the tariff wars in the way he's been doing. And that would be quite good for the world. It would calm down the anxiety, will reduce uncertainty. I think that would be very good for business around the world. And Mr. Trump will have to find other instruments to exert pressure with on the world. But we're not there yet, and we really don't know what the Supreme Court is going to decide. I think it's very unpredictable.
You talk about Federal Reserve. How do you judge Trump's pressure on Federal Reserve? He blames Powell on inflation and for not lowering interest rates, but his own measures, Trump's measures, aren't helping to lower inflation.
Well, Mr. Trump is very confused. He says that the economy is spectacularly strong under him because he's such a wonderful president and has done such a wonderful job. And Mr. Powell and the Fed must lower rates because otherwise the economy will be too weak. Well, that's a typical example of Trump's inconsistencies and confusion. The reality is that the economy is not very strong. But inflation is quite sticky. It's what we used to call stagflation. It's a little bit of stagflation. Not terrible, but that's what it is. Now, the question is, will he win? Will Trump manage to win? Jay Powell has been very resistant. He knows he's going, and he wants to leave with his legacy intact. The crucial question is who will be the next president of chairman of the Federal Reserve. And we don't know. Some of the names put forward are quite sensible. Some of them are crazy. And until we know who the next Fed chair is and how the Fed board behaves, because the Fed chair doesn't control everything, we don't know what monetary policy will be. But my guess is that Trump will find it very difficult to get the Fed to slash interest rates in this situation, because the argument for doing so is really very weak.
And finally, Martin, are we nearing an AI bubble? Is something similar to the dot-com bubble brewing?
I think it has some similarities, but it's very, very different. Its similarity is that when you get a new technology, which is an important one, and AI is clearly very important, markets always find it very difficult to work out how much money is going to be made and who is going to make it. So you get a very classic new technology bubble. The most famous case of this is the railways in the 19th century. So it's not just the dot-com, it goes far further back. The big difference with the dot-com bubble is the dot-com bubble, there really weren't any businesses doing anything. The big investment was in telecoms, which was outside dot-coms. And that telecom investment was useful, it lasted, but none of the telecom companies made any money out of it. My guess is that's the parallel. So here it's about these data centers, and my guess is, from what I can see, that they won't be profitable, the huge investments will not be recouped, because there's no moat protecting the businesses. Everybody is basically doing the same sort of AI stuff. So the world will use the AI, but the profits won't be there. When the markets realize that, the prices of these companies will fall. But there won't be bankruptcies because nearly all the companies are funding it with their own profits. There's a bit of an exception. So I think there will be an adjustment, it will slow growth, it will lower the stock market, but it won't be a disaster.
Martin Wolf, chief columnist of the Financial Times, thank you for coming to Negocios TV.
It's a pleasure.
Y nosotros que seguimos desvelándoles este Miércoles 12 de noviembre, muy ajetreado. De momento pinta en positivo el mercado ante este orden económico mundial que hemos hablado con Martin Wolf. Hacemos una pequeña pausa en Business Connection.